Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, across the board here, what started off as actually quite a positive day actually faded off into the afternoon. We had a nice pop because of the oil numbers coming out and also an agreement of an OPEC production cut. We saw oil up almost 8.5%, 9% on the day, which boosted up the Dow, the Russell, and the S&Ps. But look at the Nasdaq Composite. A lot of selling happening right there. That's almost down about 1% on the day. So folks, we've got Dow positive, S&P off fractionally, Russell off fractionally, but Nasdaq off 56 points there. We just talked about the crude. That was up over 8.5%. We had the gold here hanging out down on lows. Same thing with bonds. Bonds actually hit new year-and-a-half lows here, and that pushed the yields up to new year-and-a-half, almost 2-year highs. So we'll take a look at all of that on the charts. But as always, we're starting off with the S&P 500s on the dailies. So folks, I'm just talking about this little bit of a trend line here over the last couple of days. So far, it seems as though breaking that trend line has formed a little bit of a balance. And then now that balance here, this is what we call a balance, just basically a little bit of a range-bound trade right in this area. Now this balance is getting tested to the downside. We're going to have to see here on Thursday and Friday if we can maintain it. We mentioned here 2195s. That's kind of our first area to watch to maintain or to see if we can maintain support. We did try and test. We got up into a new all-time intraday high and then faded the rest of the day. We closed right down below the 2200s. If you remember, just yesterday, the 2200s offered a little bit of support, and we were looking to the 2200s just because it's a whole number. But folks, if you start to undercut these 2195s, I think you have to kind of zoom out here just a little bit and take a look at right around these 2180s, okay? I think that that could potentially be the next stop if these 2195s do not hold, and that's just because on the 2180s, prior resistance, then it became support. So I'd be looking for buyers to step up to the plate at the 2180s if this rally is going to continue. Also, one of the things that we've seen here is as the market has gone sideways over the last few days, a lot of stocks have formed high handles. So even though we had a little bit of a sell-off, we actually did see some breakouts today. So we'll look at that as we go into our individual equities. But just moving on to the Nasdaq here. Here's that relative weakness we saw. And by the way, look at the relative weakness, or I should say the relative strength line on the Nasdaq, which is indicating relative weakness, right? A little bit of a down slope to it. Rejected off those 5400s. And one of the things that I was talking about on yesterday's market trend review is holding the 5350s. Folks, we sliced right through that. So now looking at the charts, I'd have to say that probably these 5300s are the next place to target here. So we'd be looking for support at the 5300s just because that was a prior area of resistance, which should now behave as a bit of support as we come back down. As we kind of zoom in here, you can just see how we sliced right through those 5350s today, and we continued selling off, closing at the very lows. And this was really predicated on the likes of, like Facebook, that sold off all day, Amazon fading all day, Apple as well looked really weak, and also the Alphabet here, very, very weak. So all across the board here, we had big cap tech selling. The Nasdaq got dragged down with the rest of it. And we just saw another distribution day build here in the markets. We're still technically in an uptrend, but folks, we are starting to see some heavy volume selling appear on the Nasdaq. That has been the relatively weaker index. And it's kind of funny to see that role reversal. We were just talking about here on the Nasdaq about, 2 months ago, how the Nasdaq was actually showing relative strength, hitting higher highs during this August-September period as the S&Ps were range bound and actually moving lower. So it's kind of interesting to see how we've seen a little bit of a reversal here, maybe a shift or rotation into different assets. But we'll see some of the stocks that are working. And again, they started off as high relative strength stocks, breaking out today on volume. Now moving over to our external markets, we did see the crude here ripping up over these 49.20s. One of the things that I had mentioned on our prior videos is I was getting concerned about how the crude was starting to form a little bit of like this potential head and shoulders. I said head and shoulders don't get completed until you undercut the neckline. So right now we were kind of in no man's land, and I'd said that any trade above the 49.20 somewhat invalidates the head and shoulders. Look what we did. We ripped straight from the lows all the way to the highs. It was just nonstop. We had also the crude inventories. We had a little bit bigger than expected draw on the crude stockpiles. That sent oil higher after that 1030 number came out. We ultimately hit a high of almost 49.90s here before fading down right below the 49.20s. So, folks, at this point, you have to take a step back. And when you take a step back, what we were potentially seeing was like a head and shoulders here on like a daily or an hourly time frame. But when you step back to the weeklies, you actually see that, folks, if we break above these 51s, 52s, there could potentially be a lot of upside potential to crude. In fact, for those of you sharp chart readers out there, you can see that there's a bit of a inverted head and shoulders here too. So interesting, on an hourly chart, we saw somewhat of a topping pattern, but when you take a step back, you actually see a bigger picture potential bottoming process. Again, you got to break out above the 51-52 region to complete the bottoming process. But folks, that could potentially lead to there's about a 20-point differential here, which means that crude could trade. It's right at 48, 49s right now. It could trade all the way up to like the 69.70 region here on the crude, just based upon how this chart is forming up here. So watch for a break above the 51-52s. That could lead to quite a bit of upside on the crude. And then taking a look at the gold here, folks. Gold trading all the way down to the lows here, 1170s. Again, one of the things I had mentioned about gold is really no support until about the 1050s here. So be careful on the gold. Again, taking a look at this on like an hourly chart, you can just see it's hanging on right to those lows here just by a thread. And then finally, the bonds here. Bonds hitting new lows, which means bond yields are hitting new highs. Let's take a look at that chart there. So we got up to the 2.368 level. Bond yields ripping higher after better than expected ADP private payroll report numbers this morning. Also, the crude inventories helped out. And remember, folks, Fed's probably going to be watching, and the market's going to be watching those non-farm payrolls coming out on Friday pre-market. Now, I had mentioned that even though the markets were somewhat soft today, we did see some nice movements from individual equities. So with the nice 8.5% pop in the crude, we saw a lot of these oil and energy companies getting a nice pop. Here's one of these stocks here. You can see triggered right through our trend line, broke out, huge volume here. This is ticker PE, Parsley Energy. And so this is just one of those things. It had great relative strength. It was trading up near highs. And here we have a nice news event that benefited the crude or the energy companies. And you've got some breakouts here. So when you look across the board, there was a lot of breakouts in the energy sector. Also with the bond yields, or I should say bond prices hitting new lows. We saw a lot of the banking sector stocks starting to run the financials. Here's just a couple of these right there. They've been forming these little high handles, forming up real nicely here. Even like a super big cap stock like a JP Morgan here, right? High handle, gapping up, breaking out. So we're seeing a lot of this in the energy and the financials. Those are leading the way. And also even some of our stocks. We took a look at Zeltic a couple of days ago. We entered that trade. Had a really nice move today. It was up almost 3% on the day. Just taking a look at the 5-minute chart. Okay, you can see yesterday here, we had entered this right around the 42.60s, okay? And you can see that this, once it got through this little bit of resistance here, right around the 43.40s today, nice move into the close, closing at the highs. This is a nice swing trade. Another one is the material stocks here, the EXP, Eagle Materials, part of that post-election infrastructure rally breaking out of a high handle. Folks, just across the board, you see a lot of these high handles breaking out, and that's one of the things I had mentioned previously. Look for double bottom and high handle setups, because that's what the indices are forming. And if you have any sort of breakouts, that's the setup you're going to be looking for. Those are the two predominant chart patterns. And again, we just covered a bunch of stock tickers. Just want to mention there, it's not a buy, sell, or hold recommendation. We just go through these stock tickers here, individual examples, to demonstrate the setups or the characteristics of some of the leading stocks out there. And again, folks, as we take a look across the board, whether we pull back in the market, go sideways, or even attempt a new all-time high, the game plan always has been, always will be, looking for the best relative strength stocks, forming chart patterns, and that are breaking out on volume. Those are the scenarios and the trades that we like to take, and that's what we're going to be looking for going forward. But other than that, folks, just wishing everyone a great trading day ahead, and tune in to our next edition of our current market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.